So that's goods. Time of supply for services will also be something we have provisions for that. So let's read time of supply for services.
The time of supply of services shall be the date of issue of invoice or the date of receipt of payment, whichever is earlier, the date of completion of the provision of service or the date of receipt of payment, whichever is earlier if the invoice is not issued within the prescribed period, the date on which the recipient shows the receipt of services in his books of account in a case where the provisions of clause A or B do not apply. Explanation 1. For the purpose of clauses A and B, the supply shall be deemed to have been made to the extent it is covered by the invoice or as the case may be the payment. For the purpose of clause A and B of subsection 2, the date of receipt of payment shall be the date on which the payment is entered in the books of accounts of the supplier or the date on which payment is credited to his bank account, whichever is earlier.
Same mistrust, somewhat similar provisions. So essentially we are still looking at the same variables: completion of service, invoice and receipt, and then we have permutations and combinations of that. Today we have a 30-day period which is hard-coded in Rule 4A. Here we have no prescribed period, so they prescribe a period maybe 30 days. So more or less life remains similar as far as this rule is concerned. Am I with you? Let's go to continuous supply. Here we see some interesting changes.
In case of continuous supply of services, the time of supply shall be where the due date of payment is ascertainable from the contract, the date on which the payment is liable to be made by the recipient of service, whether or not any invoice has been issued or any payment has been received by the supplier of service.
Let's pause for a minute. This is different than what we have right now. Right now we have a continuous supply wherein there is a deemed completion. Let's read this once again. Where the due date,
where the due date of payment is ascertainable from the contract, the date on which the payment is liable to be made by recipient of service, whether or not any invoice has been issued or any payment has been received by the supplier of service.
So, if your contract, which is a continuous supply of service, can define a due date, you will pay GST only on that due date. Advances, etc., become redundant. Today, you pay GST on advances, that goes away in a continuous supply of services. I hope you have appreciated what it is. It just says the date on which the payment is liable to be made. So if let's say there is a telecom service, there is a billing cycle, every 5th is the due date. So 5th due date is the date on which you will pay the GST. It does not matter whether you raised an invoice on X date, whether you received the payment on Y date, all of that is totally irrelevant. It is only the date on which the payment is liable to be made.
Clause B, where the due date of payment is not ascertainable from the contract, each such time when the supplier of service receives the payment or issues an invoice, whichever is earlier.
Yeah. So if the due date by itself doesn't come, but it is linked to a completion of an event, which is C.
Where the payment is linked to the completion of an event, the time of completion of that event.
So your case would be, you have raised an invoice, which is an event. Raising of an invoice is an event. And completion of that event results in a liability to pay. So therefore, you will be in clause C. The date of invoice will be relevant for you. So it will depend on small subtle differences which are there. Importantly, advance concept goes away and it goes into a due date type of a concept.
Continuous supply of services means a supply of service which is provided or agreed to be provided continuously or on recurrent basis under a contract for a period exceeding 3 months with periodic payment obligations and includes supply of service as the central or state government may, whether or not subject to any condition notified.
So just to explain this entire process, we have 3 broad situations. The first situation, due date of payment is ascertainable from the contract, like the telecom, renting, insurance, you have renewals of insurance. So there is a fixed date. You pay by that date, and that is clearly ascertainable from the agreement and the contract copy. Look at that date. Advance is not taxable. Where it is linked to the completion of an event, like the example of a contract saying 15 days from the date of invoice, or a contract saying like a builder's case, wherein they say completion of a milestone, or a contractor's example. All of that, you will have the completion of the event. Again, advance is not relevant, invoice is not relevant, completion of the event becoming relevant. And where it's not ascertainable in this manner, then invoice or advance, whichever is earlier. So you have a different type of mechanism for 3 different situations, which is not something which is envisaged in the current mechanism. To a large extent, it is positive because you actually go away from advances. So it's like service tax had a tax on advances, therefore goods, they brought a tax on advances. And again in service tax, you actually deviate from advances to a large extent by doing all of this. So in that sense, yes, an interesting proposition which we are talking about. RCM, similar provisions.
RCM, time of supply of services. In case of supplies in respect of which tax is paid or liable to be paid on reverse charge basis, the time of supply shall be the earliest of the following dates: date of receipt of services, date on which the payment is made, the date of receipt of invoice, date of debit in books of accounts.
Somewhat similar provisions, I think. We can explanation, we can just keep issues, the same issues, provisions is a big concern. Interestingly here, they have used in the new provisions date of receipt of invoice. Current provisions, wherever they are linked with invoice, are based on date of invoice. And this is a big concern. Even like today we have a 1 year time frame for claiming credits. It is 1 year from the date of the invoice. And most of the companies come back and tell me that हमारे यहाँ तो system ही ऐसा है कि 4 महीने के बाद तो bill मेरे टेबल पे आता है. So here they are using the word date of receipt of invoice. It's not the date written on the invoice, but the day when you receive the invoice, which will trigger the liability. Now this can at times open up options. I don't want to discuss too many of those things, but yes, it can open up some options. It's a very nebulous concept. Date of invoice is a documented concept. Date of receipt of invoice is a very fluid and a nebulous concept. So you can have concerns or opportunities on that front. So this is time of supply. At the same time, they have not addressed various things. They have talked about a few things. They have talked about changing the effective rate of tax for services. I have not gone into it because it's not going to happen immediately and it's more or less similar to the current Rule 4. But lots of things they have not addressed. They have not addressed a situation where there is a change in situation, especially when you have 5 parameters. You can have a situation that when you remove the goods, there was one law, and when you raised an invoice, there was another law. So how are you going to deal with that? They have not addressed many situations like this. I think as time progresses, they'll have to do that, or we'll face similar issues like the KKC and the SBC nightmare, which we just faced recently. These are all examples of issues which come up because you have multiple taxes. Excise never faced those issues because they had only one direction. Remove kiya, goods tax. There was no other direction. Service tax you face this issue. KKC आएगा तो क्या होगा? SBC आएगा तो क्या होगा? Exemption से taxable में जाएगा तो क्या होगा? All these issues come because you want to tax advances and you want to tax invoices and you want to tax earliest of the two. That's the reason all these issues come. If you had only one base, you wouldn't have had these issues. With this, you have so many bases. So you will have so many places where concerns will come. I will not take time. I think we are reasonably behind. We'll just break for 10 minutes, I think, for a short convenience break and it will. No, bad debts is not available as a credit. Under valuation, there is a concept of credit note which I will be touching upon when we go to the input tax credit. But bad debts is no.